Ladies and gentlemen, we are welcoming back Adrian Morris to the show rather quickly. Since he was on, by the time this will be released, it'll be about maybe a week or two since Adrian was on the show last. Since then, I would say that I've been MicroStrategy pilled in the sense of understanding it a bit more, moving beyond that idea of it just being like, oh, it's leverage baited to Bitcoin, and actually looking at how that ecosystem of products matters for, the economy of Bitcoin, as you called it on the show last time. That kind of, it gave me a lot of click moments that I was like, okay. So first off, I think a good place to start is I saw a post from the True North group, essentially talking about how MicroStrategy is the new money printer. I'd love it if you could go into depth on that, because it's funny because, the Bitcoin Austrian econ guys tend not to be fans of money printers. So, right. And here we are calling MicroStrategy the new money printer. So take it away.
Yeah, sure. First, thanks for having me on again. I loved our last conversation, and we had a conversation 6 months before that, like way before that on the power law. That was a fun one.
Mm-hmm.
So it's good to be back. But so let's go through this concept of a strategy economy, a Bitcoin economy as well. If you think about the SBR, right? One of the things that people have been clamoring for is for the U.S. government to start printing money to buy Bitcoin, right? They would print money, they would buy Bitcoin with it. We go to the moon. The U.S. government could acquire as much Bitcoin as possible. What people don't realize is that Saylor is essentially doing the same thing. So when he issues a convertible note, when he does an ATM equity offering, he's essentially printing shares to the market at different times in order to acquire Bitcoin, right? So that is why you heard that in that post, I think it was from Acropolis BTC, and I tagged it and True North tagged it, why they're saying that strategy could be the new money printer is because what he's essentially doing is he's printing shares and he's using those shares to buy Bitcoin. And in a very succinct way, what he is saying is, I'm going to use these shares to buy the Bitcoin. Yes, it does incur temporary dilution, but the Bitcoin goes back on the balance sheet. Once the Bitcoin is back on the balance sheet, that levers up the stock, that levers up the volatility of the stock, thus levering up the price of the shares. So in that post that you're referring to, they also talked about the Cantillon Effect, which is essentially saying when money printers go on, when massive stimulus is injected into the market, the wealthy benefit from it the most because they're sitting the closest to the money printer. And what that means in theory is that if you are a very wealthy individual, you are obviously closer to the networks of power that exist in your society. And thus you will either be a direct, when I say a direct beneficiary of, you would know about the money printer and you would be able to take advantage of it, or because of the virtue of your position and because of the fact that you are wealthy and you hold equities and assets and so on and so on and so forth, when that printer turns on and the appreciation comes into play, you stand to benefit from it. Very much in the case of strategy, what is happening is that when Saylor's turning that printer on, when he's turning that share printer on, either in the immediate term with ATM equity offerings, or over the long term with convertible notes that he's paying back in shares, what essentially is going to take place is that strategy shareholders, they're sitting very, very close to the money printer in that example. And thus, if they hold on to it for the long term, they will tend to benefit from that printing because the printing is accretive long term.
Can you talk about the Cantillon Effect a little bit more? I'm not sure if I'm mispronouncing that, but the Cantillon Effect.
I may be mispronouncing it as well.
Because I know he's Irish-French, so it'd be like Cantillon or something, potentially. Yeah. It might just be, well, fuck it, we'll just call it Cantillon. I'm not going to sit here and go over pronunciation. But because that seems like something that would potentially piss people off long term, of just like, well, they're just being closer to the new asset that's being printed. And in this sense, forgive me if I'm misinterpreting it, but like in this sense, like actually being part of the MicroStrategy economy. So like owning some various forms, whether that's Strike, Strife, Master, these kind of plays on Bitcoin, that is giving you higher exposure to the Cantillon Effect? Or is it just owning Bitcoin as a general like asset itself that gives you greater exposure to the Cantillon effect. So if people were looking to maximize their proximity to the money printer, what should they be owning?
I would say that there's a few ways to look at this. You can look at the Cantillon effect in and of itself, right? You are, because of the position you hold, and when money is printed and when the mass stimulus comes into an economy of scale, you benefit from it because you hold assets, right? So if Bitcoin is the new asset, if Bitcoin is the new money that we're all taking that bet on, strategy is essentially front running all of the different Cantillon effects that we're going to see in the future by printing the shares. So even though he is printing those shares, and as I explained, those shares are being used to buy the Bitcoin, because you are still a shareholder, you are standing to benefit from that long-term Cantillon effect of the stimulus coming into the Bitcoin economy in the form of strategy shares, and then of course other players. That's going to drive the price of Bitcoin up, which is going to drive the price of strategy up, which is going to drive the price of your holdings higher up. Now, some people may have an issue with that from maybe a theoretical standpoint, or perhaps a ethical standpoint, maybe even. But the fact of the matter is, economy of scales operate the way they operate for a reason, and they make the world go round, right? So this is a way that Saylor and Strategy are saying we're going to take advantage of this disadvantageous system that currently exists with a fiat currency, use a more advantageous model to thus acquire Bitcoin, and give benefit by proxy to the entire Bitcoin economy and thus the entire strategy economy. Did that answer the question?
That does. No, that clarifies it. Just because I was like, yeah, there's a couple of things there that I was kind of stuck on. And this is something that I want to get out of the way straight away because it's really interesting. You started, I'm not sure, did you start True North?
No, I did not.
Okay.
You want me to get into? I can get into it if you had a specific question.
Let's get stuck in because I was more interested in like True North is something that, just by speaking to you, I've now seen on the timeline quite a bit. I've followed, been watching along. What's the deal with True North? Like, what's the aim of what you guys are trying to do there?
So the aim of True North, the aim of True North, as the name indicates, is to be the true north of information. Think of it that way. Okay. We want to be individuals that are providing the community, that are providing investors with the knowledge that they need to fully understand the strategy investment thesis. And whether that is going into dynamics on convertible debt, ATM equity, the overall investment thesis, understanding how Bitcoin plays into it, the different offerings that exist on top of and around strategy. All of us collectively have different knowledge bases. Most of us are very, very well versed in all. And we essentially come together and have live streams where we talk about these different topics. They vary very from week to week. Punter Jeff is actually one of the individuals that started True North, and the actual MicroStrategy Responsibly Long community was started by Mason Ford. So myself, Jeff, Ryan, Ryquant, Mason, and Adam Bach are the five original mods on the site. Mason is the admin since he started it, and it just kind of ballooned from there. So Jeff and I talked months back now, over a year ago actually now, we started talking about MicroStrategy when it was still MicroStrategy. And you have individuals like Ben Workman. Yep. And you have individuals like Ben Workman who posted about about strategy often. He and I started talking, right? And then, Mason started Irresponsibly Long, and then you had Ryquant. And so it just kind of coalesced, where the idea was proposed by Jeff to essentially create a more dedicated focus group that would put out content and that would put out information for people to see and to absorb, and to be the people that dispel the myths and dispel a lot of the talking points that exist around strategy as an investment opportunity. And it's kind of grown from there, really, in ways that have surprised us. And it's only going to continue to grow in the future if things go along this path.
Okay. What are some of those myths that you run into most frequently when it comes to MicroStrategy? If you had to go through like maybe 1 to 3 of the biggest kind of pain points that you have when you talk about strategy in the market, what are those things that people tend to come back to all the time and say, no, you're not seeing this correctly, or you shouldn't be this, irresponsibly long, this idea of the MicroStrategy ecosystem?
Well, so I think you and I touched on one of them in our previous conversation, the notion of Saylor being margin called, right?
Yep.
That's one that comes up every month to 3 months, and it's really weird. And what it is, and I'm just being blunt here, it's people on Twitter looking for clicks and views is what it is. And these things are being recycled. There's every 3 to 6 months, there's a new video coming out claiming to be the doom of strategy. And we then have to come out and say, no, the debt is unencumbered. He cannot be margin called. And we have to go through at various levels, we go through it very simplistically, and we go through it in a great level of detail. And simplistically, the reason why he can't be margin called is because where does a margin call come? When you're issuing shares at the market to buy to buy the Bitcoin Cash, and when you are issuing convertible notes that you're paying back in shares, and thus you're buying the Bitcoin in cash. He is not trading Bitcoin, and I think that's what people either disingenuously don't want to mention, or perhaps don't accept or understand. He is not going to the market and being a Bitcoin trader. He is going to the market and buying Bitcoin. That's what he is doing, right? That's why when many people lament why he couldn't wait for a better price, why didn't he wait for this, why didn't he wait for that? He's not trading Bitcoin. He is a net buyer of Bitcoin. So that's the first point.
Okay.
The second one that irks me personally is all the conversation around the ATM equity, and people saying that it is price suppressive and so on and so on and so forth, and coming up with all of these, in my mind, very univariate explanations for why this happens. So if you have, and one of the points that I just got into a long series of threads with this past week is people are saying, well, 3% at the margin is significant. And what that means is, in Strategy's last earnings call, they had a slide that said the ATM volume was 2.9% of overall trading volume over a certain period, right? And what people are saying is, well, that 3% is significant, right? Because the price moves at the margins, which means that when you account for all of the trading activity, a very small volume of shares can move a price either way, right? It
Yep.
can be directionally important. So very simply, I've been saying this now for months. If your claim is that 3% is moving the price, have you accounted for the other 97%? The answer is no.
That's a reasonable request. Yeah.
Yeah, the answer is no. No one to this date, no matter who they are, has accounted for their 97%. And there's so many variables that go into what pushes a stock price that if you are saying that 3% could be directionally important, you are then also saying that 97% is directionally important. And what you're essentially then saying is that there are a lot of things that move the stock price, which is essentially what I'm saying. So, long story short, stop making claims about 3% moving the stock price down without accurately, methodically, and purposefully accounting for the other 97% of trading volume. It is a nonsensical argument that just will not go away. But people harp on it because they are very emotionally invested, and some are very heavily invested in strategy being the way that they can, get their 100x and get out and get rich, right? But to that, I say, then you don't really understand what you've invested in some ways, because it's not just about number go up. And people say, well, that's the only reason why you invest. No, it isn't. Number go up is the reason why you may trade. The reason why you invest is that you have a long-term thesis. That's why it's called investing and not flipping.
Can you break down the ATM stuff a little bit more? So you've talked about there being the 3% that's trading, that's moving around, or supposedly claimed to be moving the share price around. What is the ATM side of things when it comes to Master?
So the ATM is an at-the-market equity offering where he is selling share prices at the market to raise capital for whatever. And in this case, it's clearly buying Bitcoin, and in some cases for corporate company expenses, right? So they are executed by a VWAP or a TWAP. And I'm not sure if I touched on this last time, but a VWAP is a volume weighted average price. TWAP is a time weighted average price. And these are algorithms that go to the market and execute the shares, execute the sales of the shares. The strategy is not doing this by themselves, it's done third party. So the volume weighted average price means that it's executing the trades where the volume is advantageous to do so in such a fashion that it does not move the price either way. It is intended to be directionally neutral. Time weighted, and by the way, strategy uses volume weighted. Time weighted as a contrast. Of course, during different days and different times, you're going to have different trading volumes. You're going to have different trading dynamics. The time weighted is trading into that volume, that activity, in a way that's designed to be market neutral. And how they come about these market neutral derivatives, sorry, not derivatives, I'm using the wrong terminology, that'll confuse people. How they come up with these market weighted and these volume and time weighted averages and these volume and time weighted same points that they can enter the market is that these algorithms are going off of data that goes back 1, 2, 3 quarters. And that goes back 1 day, 1 week, 1 month at very, very different time frames, right? On the volume weighted side is looking back in time at different volumes, and it's trying to come up with an equilibrium where the algorithm can execute in the market in a way that doesn't affect price moving with volume. Same on the time weighted side, right? It's looking for trends in different times where trading is taking place. I probably got into too much detail there, but I just wanted to give that. So what the ATM equity offering is doing is it's trying to sell shares to the market in a way that is going to be market neutral or have very limited market impact. Now, people lament this because they're saying it's 3% of shares, it's billions of dollars of selling volume. Therefore, it's clearly the reason why the price has gone down or hasn't hit the moon yet, right? The reason why that is not the correct view, in my opinion, and is why it is an overly simplistic view, in my opinion, is because, just like I said, you're not accounting for the other 97% in that equation. You're just saying that 3% can move the price. Okay, then you're not even really saying anything at that point. Because if 3% can move the price, 97% will move the price more.
Yeah. Where is that? What's the other 97%? Where is that hanging out?
Well, with strategy, that 97%, that accounts for a lot. So strategy moves at a high beta to Bitcoin, right? It moves sometimes 80%, right? And there are many individuals that have shown that when Bitcoin moves, strategy moves, okay? So that's one aspect. Then you have the fact that if strategy is moving in tandem or closely related to Bitcoin at very, very long time frames and at different times, that means that all of the underlying effects that impact Bitcoin will affect strategy. So you have the futures market, you have the options trading that exists on top of IBIT, you have all of the trading volume that exists on Bitcoin. And just so people know, because of the futures market and because of the different trading dynamics that exist, any buying activity that's done by the ETFs, for example, or institutions is dwarfed by the amount that can be done with the futures market because the futures allow you to trade Bitcoin you don't have. So you can have short positions that are much, much larger and disproportionately impact the Bitcoin price. So those are levers that I just touched on that don't even have anything to do with the equity of strategy itself. Now, strategy itself as a equity, because of convertible notes, you have institutional players that are longing and shorting it that have different arbitrage plays that they're issuing, right? You have the ATM volume that is selling shares at the market, right? You have the options market that exists around strategy, which at times has rivaled NVIDIA in open interest. NVIDIA is a multi-trillion-dollar company. Strategy at times has crossed 100 billion. That by itself tells you just the sheer amount of volume of shares that exist in the market. And just so you know, open interest means that when you have open interest contracts, all of those shares are locked up in those contracts at varying time intervals. So you have individuals that are going week to week, you have individuals that are going month to month, you have individuals that are doing calls, that are doing puts, that have long-term strategies, short-term strategies. All of those shares are locked up, so the volume of shares in those open interest contracts can really impact dynamics. Because let's say you have a high volume of shares locked up in open interest contracts, then someone will come in and say, aha, that's how 3% can move the price, because there's so many things that are locked up and there's so many few shares that are circulating. Therefore, 3% of selling pressure is directionally important. To which I say, if 3% can move it in that instance, that means 97% will move it more in that example as well. Have you kind of a 97%? And I still get crickets when I pose that. So
Yeah.
you have open interest, you have the options market, which is massive on top of strategy, right? And now you have MSTU, you have MSTX, you have Strife, you have Strike. Those are different vehicles that exist either around or on top of strategy, that are either playing the options market or that are introducing different market dynamics into the trade itself. And I haven't even got into all the details on it, but if you think of it as well, MSTU and MSTX, even though they're levered plays, they're also playing the options market. MSTY, which is a dividend play, it is also playing the options market. IMIST, which is the new dividend play from Bitwise, will also be playing the options market. Do you see what I'm saying? There's so many moving parts that any claim that someone makes that 3% is going to be directionally important in all instances, at all times, and always to the downside, I call shenanigans on it. I'm sorry.
Okay. So we've gone through two main things. What's the next main myth that you spend probably an egregious amount of time working through
that's a Ponzi
or pushing
scheme.
back?
Yeah,
that
the
is a
strategy is a
Ponzi.
Ponzi scheme.
Of course, yeah.
And to that I say, I'll just use this one point here. When they rebranded from MicroStrategy to Strategy, they launched a website called strategy.com, right? And I don't know if you checked it out yet, but it has all of the metrics for strategy. It has all the convertible notes. It has the MNAV, which is a metric that I hate. It has everything you can think of in terms of understanding what strategy is doing, put out there for everyone to consume and for everyone to ingest and for everyone to understand. What Ponzi scheme is that transparent? That's the first thing. The second thing, every time they do an ATM equity offering, every time they do a convertible note, they have to file an 8K. They're doing SEC filings, right? This is being tracked very, very closely. And if we rewind the clock to 2020, when we still had Gary Gensler in the United States SEC, he was very hostile to crypto, as I'm sure you remember, right? He was doing enforcement actions left and right, everything. If you so much as blinked and said you like Bitcoin, he was dropping an enforcement action on you. So in this environment, people are trying to claim that strategy was running a Ponzi scheme that scaled up to almost $100 billion, that allowed them to scale up to have hundreds of thousands of Bitcoin in an incredibly hostile environment where they were being openly transparent the whole time. The answer is no. This is not a Ponzi scheme. It is just people have a very hard time grasping the corporate structure. And I understand that. But just because you perhaps don't have a full grasp of what is going on, that does not mean you should disavow it and call it a Ponzi scheme.
So if I've gone to strategy.com now and I'm looking at the dashboard, there's a lot of figures and numbers here. What are the most important ones? If I was to look at this as a brand new strategy investor, what are the things that I should be keeping an eye on from the outset as the most important kind of metrics? What do I want to see growing? What do I want to see decreasing? Just like a general 101 class here.
Well, one, and I don't have it in front of me right now, but one, they have a debt tab. So if you click on debt, that shows you all the convertible notes. Okay. And the convertible notes are, strategy taking on debt often at 0% interest, not always, but often today, and they're paying it off in shares at a certain strike price tomorrow. So if you take a look at the debt and you take a look at the different lines, you should be seeing different share prices. So what that is saying is in 2029, they will pay off X amount of convertible debt. Oh, sorry, it's not showing the amounts, I don't believe. In 2029, they're paying off the debt at a certain strike price, whether it's 149, 249, I can't remember. But that's what it's saying. It's saying it'll be paying off the debt with a number of shares at that price. That is how the convertible note works, right? And that goes back to the whole money printer analogy of how strategy is printing out shares, is issuing shares, is using shares to accumulate Bitcoin, and they're doing this via a variety of different levers. I think at this point now they also have a strike and a strife tab there as well.
They do.
I haven't looked at those much myself, but those should be giving you some details on strike and strife, certain metrics about it, things of that nature. What I'm hoping that they add is an ATM tab that shows all of the at-the-market offerings that they've done in the past, so that we have some trackable metrics on that. One of the activities I'm undertaking right now is I'm going through all of the 8Ks manually. I am accounting for the particular at-the-market offerings that were done in each 8K and the share price at that time and global liquidity at that time as well is what I'm trying to do. To show a trending that is to say that you can't really just look at the ATM offering, for instance, to grasp what the particular impact on price would be.
Okay.
And even with looking at strategy, I'm trying to urge people that you cannot look at strategy in and of itself. You must look at Bitcoin. You must look at larger market dynamics. You must look at liquidity as a consideration. This is not this is not a univariate trade. This is a multivariate, multi-levered, multi-layered, multi-billion dollar economy that you are now a part of, and you need to take a look at it very, very holistically.
Okay. Before you said something about Saylor being a net buyer of Bitcoin, and this is something I just see from mostly shit posting on the timeline of this meme that Saylor top blasts Bitcoin, of like, holy shit, he bought this much here. I think during the recent downtrend, strategy purchased typically like less Bitcoin than it typically does. What's your understanding of why Saylor just seems to buy whenever he wants rather than waiting for a quote unquote good price?
Well, and I hate to keep belaboring this point, but this does come back to the whole point of why I see strategy as forming an economy, right? What sailors do, and this is my personal opinion. My personal opinion is that Bitcoin exists as the ideal base layer for money, and that we should issue currencies on top of Bitcoin and have it backed by Bitcoin, right? What Saylor is doing, if you really think it through conceptually, he is creating Bitcoin as a base layer for a new traditional finance system in traditional capital markets, in my view. And if you think of it in terms of having Bitcoin backing money, he is backing his shares by Bitcoin, which is why he has started to issue, well, he started a few months ago issuing the Bitcoin per share. It is helping people understand that per share of strategy, this is how much Bitcoin you have, right? Now, people would lament that and say, well, as the price of Bitcoin goes up and as the number of shares are issued, the amount of Bitcoin per share you have will decrease. Well, sure, but the whole thesis of this is that Bitcoin is going to go up in price. So in the future, where you have Bitcoin being 100,000, 500,000, a million, $10 million a coin, you having proportionally less Bitcoin per share does not mean you have less value per share. You would have more proportional value in Bitcoin per share as this thing goes on. So why Saylor is a net buyer, in my opinion, and quite frankly, is very, very plain that he's a net buyer, which is why he says, I'll be buying the top forever, is one of his quotes, right? It's because his primary goal is acquiring as much Bitcoin as possible so that when, in my view, when Bitcoin becomes this new base layer for this new economy that's going to exist in traditional finance and traditional capital markets, Bitcoin is going to become systemically important. And when Bitcoin is systemically important, right now it's not even systemically relevant, it's too small. But when Bitcoin becomes systemically important in the sense that the market cap has swelled to a size where it is now noticeable on a global scale in a true way, not just in a speculative way, not just in an investment way, but in a way where people are saying this asset class is now so large it cannot be ignored and it's systemically important and systemically relevant and thus must be accounted for on a global scale. Strategy is at the dead center of that, right? There are over 500,000 Bitcoin right now. If they get to 750,000 or a million Bitcoin one day, just grasp what that means in terms of pure market cap, in terms of pure ability for them to issue new offerings, for them to have new offerings, for the broader market to have new offerings. Think about how the current offerings will scale and the kind of activity we'll see in those current offerings, right? At $1 million, at 1 million Bitcoin, that's what, 1 trillion, right?
Yep.
Imagine, look at what's going on right now with strategy under 100 billion. Imagine what can happen with strategy at $1 trillion. Imagine what can happen with strategy at $5 trillion, right? There's no way anyone can say this is not an economy of scale in and of itself. It is very, very fundamentally different from someone having like a levered play on NVIDIA, right? They have 2x plays on NVIDIA. They have 3x plays on NVIDIA. But what is the base layer of those plays? It is still the NVIDIA stock, and it's still the investment thesis behind NVIDIA. The base layer for strategy is Bitcoin. That's fundamentally different. The base layer of strategy is a brand new asset class that's only going to scale and grow with relevance and importance and in price, of course, right? So that's what makes it fundamentally different, and that's why I say it's an economy, and that's why I say Saylor's a net buyer. He is building out a new economy. He is building out a new financial system. He sees the future and where this thing could be going, and he's trying to position strategy at the center of it, at the epicenter of it, to be a major player in that new economy when it fully scales. And that's why I say he's a net buyer.
Okay. Now, this is a bit of a meta question. Sorry, I've been holding that in for a while.
Oh, no problem. I'm going to hold it against you.
I'm just like, this is a bit of a meta question around your kind of philosophy or thought process regarding Bitcoin. Now, one of the reasons that I really like having you on the show is that you're probably one of the most sensible Bitcoin maxis out there. If you consider yourself a maxi, because there's a lot of Bitcoin takes out there that are just silly. You know, I think each cycle we have someone that comes in with a new number go up model. You know, we can leave it up to everyone's imagination as to what those are. But, you know, stock to flow, you know, whether it be a power law, these kind of things that just say like, oh, mega adoption is on the way, and it's never really offered with any semblance of reason as to why there is or should be continued adoption of Bitcoin, rather than just like, oh, well, network effects, Metcalfe law, throwing in kind of big philosophical concepts that sound nice but don't really offer anything in the way of, but why are people adopting Bitcoin at scale? And I think that's my question for you is, why do you think that Bitcoin will or should become systemically important as opposed to something like gold? Which was systemically important up until 1971 and still is systemically important in a certain way. Like, you know, there's still a lot of value tied to it. We got rid of the gold standard, but that doesn't mean that we don't still have vaults filled with the shit and people still, you know, value it quite highly. Like, I think gold's at its all-time highest price right now.
Yep.
So
it's
still systemically
there's a broader
important.
market dynamics. Yeah.
Exactly. So why do you think it is that Bitcoin as a digital asset will become systemically important in the future?
My overall thesis is this. More and more people are becoming aware of the impact that a fiat currency has on their life, but they haven't made the connection yet. And then let me be specific with that. And I think we touched on this in our last conversation. When we were on the gold standard, if you go back, not just to 1971, but if you go back to the 60s, 50s, 40s, 30s, so on and so forth, right? If you think about it, the dynamics that existed in the market and in people's lives are very, very different. And what I mean by that is this. Not everything was about consumption, right? Our entire economy now is based on consumption. Mm-hmm. Number must go up, we must buy more. Number goes up, we buy even more, right? However, in the past, it was really truly based on value. It was truly based on production. It was truly based on having things that really were true assets that held value over time, which is why you saw houses. You can see houses that were built 200-300 years ago that are still standing today, right? But the McMansions that are built today, a lot of the homes that are built today, let's be honest, do you think they're going to be standing in 300 years? No. They're not built. They're not built to last that long anymore, right? And that is a byproduct of a fiat currency, in my view. A fiat currency where you have the dynamics that exist that you just print it into oblivion is essentially what it is. means that something that you buy is perpetually going to lose value. Most of the things that we buy, whether we buy a cell phone, whether we buy a microphone, whether we buy cameras, whether we buy a TV, whether we buy whatever, haven't you noticed how that when you make the purchase, if you fast forward 2-3 years, you're going to get what, maybe one quarter of what it was worth?
Mm-hmm.
Do you think that's because the value of that item has gone down, or that the value of the money that you spent on that item has gone down? In reality, it is the latter. It is not the former. That device is still just as valuable as it was when you bought it. It can still do the same things. And this is why people are slowly becoming aware of what's going on. Home prices don't rise because the home itself has become necessarily more valuable. It is that the money, the worth, the value of that asset is worth more because the money you purchase it with is worth less. These dynamics are becoming more innate in people's minds at a very, very base level. If you just take a look at social media, if you just take a look at the general conversations that take place, no matter what the political leaning, no matter what the background, people are saying the same thing, essentially. Why is it that governments are just printing money and being so fiscally irresponsible? The prices for everything are just going up and 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 up. My purchasing power, net seems to be going down, right? Yep. When you look at technology, your purchasing power is going up, because if you had this phone in 1960, you could probably conquer the world. So, the purchasing power of what we get for our technology is a very, very nice measure, because our purchasing power there per capita is going up, right? Now, here's where Bitcoin comes in. Bitcoin is money. It is an asset. It is a commodity. It is technology. It is a network. It has all of these different effects coalescing in this one singular thing. And because my thesis is that even though we just talked about Metcalfe law, and people come up and say that Bitcoin is a network and it has network adoption effects and so on and so forth, one aspect of it that is true is that Bitcoin does seem to be following along an S-curve. It was fractions of a penny when it first came out, and now we've seen it reach up to almost $108,000, $109,000, right? That is a wild appreciation in price.
It's the best performing asset in the history of assets. So,
yeah, exactly. And that is why I think it is an idea whose time has come. And this is something that other people have said, right? Bitcoin is an idea whose time has come. We need an asset that, regardless of whatever government debasement that exists, it can suck in all that capital. It can siphon in all that excess printing and still raise in price. It is an asset that people can use, that people can own, that people can hold. And it is an asset that cannot be taken away from you. And I think that is why, my personal opinion, is why Bitcoin will reach escape velocity at some point in the next 10 years, is my view. It is because it is an idea that whose time has come. Another important factor of it, and I hate to keep showing my phone like I keep showing, but when it gets to the point where Apple, Samsung, whomever, integrate Bitcoin wallets into their software, all hell's going to break loose. Because then your phone doesn't need an app. Then your phone doesn't need Coinbase. When we have a simplistic interface that allows people to just tap their phones to one another and send their Bitcoin to and fro, without the need for a third party, without the need for them to understand a Lightning wallet, without the need for them to understand a Coinbase wallet, removing that other layer and just having it on the phone, I think that's another part of the adoption curve that's coming. And I'll end with this. People underestimate the importance of the unbanked. There are still billions of people in the world that are not taking part of the capital markets in any way, shape, or form. Bitcoin is a way that they can do that. Bitcoin is a way that they don't necessarily need to have a bank account. They don't need to have a checking account. They can transact person to person without the need for a bank, because and this is where the layer twos do come in, where when you have a world where it can be easily transacted into stable coins, where it can easily be transacted into smaller payments with Lightning, so on and so forth, that opens up the door to banking the unbanked in a way that I think is being grossly underestimated. So the amount of printing that can occur over the next 50 years, and this may shock you, But don't be surprised if you see America's total debt not only crossing 50 trillion, but going to 100 trillion.
Mm.
People that are saying that everything is going to collapse and it's going to be, no. They're going to print. They're going to print money. And this is true for Australia. This is true for the European Union. This is true for all nations that exist on a fiat standard. They're going to print money. That printing is where Bitcoin is going to make hay. And coming back to the gold example, gold is running because people see something coming. People are looking and they're saying that the equities, the traditional stock market, that's not necessarily the play. I'm going to go into something that has a little bit more of a long track record of 5,000 years.
Yeah.
Bitcoin.
I'm going to buy the Lindy thing, not the 16-year-old.
Yeah.
16, 15? One of them.
Something like that.
Yeah. No, 100%.
And Bitcoin tends to track gold, but it lags it. So don't be surprised to see Bitcoin make a move later this year.
Yeah, no. And this is like something that I touched on last time, but something that I want to go into a bit more depth is I do have like a slight issue with this idea of like it can all be like economically explained by money printing, or like the excess consumption is by just immediately a result of, well, not immediately, but is primarily causally linked to increased money printing or debasement of fiat currency. Why couldn't it just be something to do, and this is something that, Veblen was talking about in the late 1800s, was with the theory of conspicuous consumption, was just this idea of, with increases in technology, we're just able to make shit at higher rates. And just removing the economic side for a sec and just looking at the fact that tech got better and people could command outputs that created more shit, that just by value of scarcity, you make more stuff, you make it cheaper, people are allowed to buy and capable of buying more things. Because late 1800s, the average working class family, you would own, a nice set of clothes and then a normal set of clothes, and that was it. Mm-hmm. Actually having technology outside of, even having basic equipment to, wash your clothes and stuff, that was communal as well. So this idea of having personal technology was almost impossible to conceive. And yet 60 years later, dishwashers were in most middle-class homes. Fridges were in most middle-class homes. So in the span of about 60 to 70 years, we've had this massive boom in consumer technology. And I don't know, I still struggle to see how that can be drawn primarily back to this idea of, there's more just money swilling around in the system, and that's the causal factor, rather than we got better at tech and we got better at making things, and we got better at making things more efficiently. And I'm not going to try and link those two things, but it's like that's almost a byproduct of the technological capability rather than the other way around.
Well, so I'm not saying it's causal, but I'm saying it's a very, very heavy factor. Now, if you look at the technology example, that is a very, very apt. And that's why I mentioned specifically, if we look at technology, our purchasing power has been steadily going up, right? What we are getting for our dollar when we spend money on technology is going up. If you look at the phone example, if you take a look at what, I don't know if you remember flip phones, right? But take a look at what a flip phone used to cost.
I miss them, man. That was
that was
the golden
were
age.
Good. Yeah, they were good, and they were more simple, and they were easier to maintain, and they lasted a longer time, right? But if you think of it in terms of the iPhone 16 Pro Max versus the Motorola Razr, I remember when the Motorola Razr, that flip phone, was $1,000. Yeah, if you wanted to get it right away, right? If you want to be one of the first people to get the Motorola Razr, you're paying $1,000. Now you can get one of the lower graded iPhones that is not the top of the line, that is exponentially more powerful and useful than that Motorola Razr for that same $1,000. Okay? So with that said, the reason why I say the technology example lines up nicely is because that is correct. We are able to produce more things more efficiently, more quickly. Therefore, it may lead to more consumption. It only stands to reason, right? And proportionally, our standard of living has been going up as well. Our standard of living has been increasing because, just like you mentioned, someone 200 years ago, it is very, very true. A man would have a suit. He would have then another shirt, another pair of pants. maybe something else if he was lucky, but he would be wearing those and stitching them and maintaining them for years before he would replace them, right? Same thing for women, same thing for children. But now we all have closets full of clothing, and by virtue of modernization, by virtue of technology, by virtue of the growth of the markets, by virtue of the growth of everything, our standard of living today would be considered something like king-like back in those times, right? But the flip side of that is that when you move away from a sound money, because this is where the distinction comes, everything you're mentioning happened with the world on a sound money standard, right? If you think about it, we had money backed by gold, we had money backed by silver, we had money that wasn't just being printed ad nauseum for whatever purposes, right? Now, people often say, and this is a common trope in the Bitcoin community, well, what happened in 1971, where we fully went off the gold standard? If you take a look at what happened then, our standard of living has still gone up, yes. Our earnings still have gone up, but the proportion is far less steep. It is starting to taper off some, right? It is starting to take on a reality of people now cannot keep up with consumption, and people cannot keep up with inflation, and people cannot keep up with the rise in asset prices. So, for instance, when I first moved to Arizona, a very nice house was going for something like $450,000, right? And when I say very nice, I mean very nice, right?
Yeah.
Now that same house is $1 million.
Of.
Yeah. Now that same house is $1 million, right? Has my purchasing power doubled in that time? No.
You're preaching to the choir here. I'm in Australia, where a moderately okay house down my street went for $3.5 million. Yeah, no. Whatever you think property, and again, I know that this is something I want to get the chart. I'm going to bring it up on screen here of like the difference in housing prices in the States versus Australia. It is phenomenal. Like Sydney and Melbourne in Australia have become these like hyper speculative bubbles. Like we have, in the nice suburbs, like just even in okay suburbs, these are nice houses, but you had houses in 2019 that sold for 4.5 million. And we're talking like beautiful, wonderful mansions in the eastern suburbs of Sydney, prime location. You think, yeah, 4.5 mil, that's probably worth that. Come 2024, so post-COVID, these things are selling for 12, 15, 20. So some of these suburbs have 400%ed in the last 5 years, 6 years.
Now,
so
that is a very important,
yeah.
And that is a very important point. And this comes back to my whole notion of fiat currency creates a consumption feedback loop that we can't escape. Why do you think prices are going up on these houses? And coming back to the examples we've been talking about, are the houses inherently more valuable? No. It's that the money itself is inherently less valuable. Okay. So more and more people are speculating with homes. That is what's driving up the prices. It is not, a home is no longer considered a roof over your head, and sure, it is an investment in the sense that you pass it down to your progeny, right? It is considered something that you are using to beat inflation, that you can take equity out of to buy a boat, that you can take equity out of to go on trips, that you can take equity out of to do whatever, right? That creates a fundamentally different market dynamic, where instead of just people consuming more because of technological advances, what happens is everything becomes about profit. And when everything is about profit, you have to entice people to buy more. If what you buy would last you 15 years, and it will last 15 years and it'll be just as relevant in 15 years, you're less inclined to buy a new one. Now, the technology example, yes, things are getting faster and faster and faster. But as I said, I'm holding technology as its own use case. Technology, adoption, network effects, all of that, though in those instances, it is still outpacing inflation. It is still outpacing the money printer. But for everything else, the consumption model, especially in the United States, is what drives the entire market. Consume, consume, consume. Whether you need it or not, whether you want it or not, you're supposed to consume. It is good for the market if you consume. That is what has happened because of a fiat currency, in my view. And I'm not saying that it is the only corollary with this? Well, what I'm saying is it is a very, very large part of it. And
It's
that is
aided
why
it. Yeah.
Bitcoin, yeah, and
Yeah.
that is
Okay.
why Bitcoin plays into that. Because Bitcoin, it is a technology, it is an asset, it is a network that can help you alleviate the pressure that you're feeling from all of these other forces that are playing down in your life. And that is why I say it is an idea that may have found its time. And that is my overall investment thesis. Not everything, but it's a large part of it.
I like that. Well, yeah, I think that's the one thing that, because I'm glad that you're willing to like, when I read the, I couldn't make it through the whole Bitcoin standard book, Safety Amos.
Oh, my safety? Yep.
Yeah, it drove me up a fucking wall, to be entirely honest. Like and it was that problem with the making the gold standard removal and the printing of fiat currency kind of like the sole beneficiary cause as to why there had been consumption. Because remember there was some kind of page thing where he was lamenting the fact that Miley Cyrus existed and like that kind of consumption culture, and then was like, yeah, it's because of fiat currency. And I was like,
yeah.
okay,
So
I don't think, and that's the kind of stuff that I think like it works really, really well if you're, and this is the issue, is it's like, I think that there's, really, really sensible pro-Bitcoin people like yourself, and then there's a large kind of set of like the laser eyes that sit in a camp of being like, and I'm going to piss so many people off. It's a good thing this podcast is still small, but maybe someone will come back to this one day and fucking ravage me for it. But
maybe
the laser eyes shtick of just being like, fiat currency is the cause of all modern ills. I'm like, guys,
no, I don't believe
let's look at causal factors of like, wage disparity. And I think we can talk about the Cantillon effect as well of like, okay, well, there's a causal relation to hyper wealthy people being primed to benefit the most from the removal of the gold standard. They're closest to the money printer. Like hyper wealthy people now realize, fuck yeah, there's a government spending spree. This is fantastic. Like I'm close to this. My assets can be the ones that benefit the most from the removal of the gold standard, which is what a lot of people have done. But at the same time, yeah, I just can't help but look at so many of the other causal factors with this. Of like, you look at all of the legal processes that have gone through, the constant beating away of wage increases for working class people, and the wage disparity between different hierarchies and different corporations as well. So there's that. I keep saying the word corporations. It's very buzzwordy, but I like to use it as one of the more interesting metrics around, well, you have a certain layer of people earning larger amounts from the appreciation in their equity in assets.
Equities, assets.
Rather than salaries. Yeah. But then if you also look at the salaries of people that are CEOs in a lot of companies, they've gone up. I've forgotten how many times, but I think it's nearly in the top 150 to 200 companies. I'll bring up the chart so that I'm not just talking shit, but it's somewhere between 200 and 300x in the last 40 years
I've seen
salary growth. And then you're looking at much smaller amount, and that's not accounting for inflation. But so we're muting out, we're essentially not being muted by the inflation thing on that chart, but that growth relative to a very small portion of society has been much higher, and they're very much the people that are driving the consumption model. They understand that it works for them, of like, well, it's a constantly, it's a virtuous growth cycle for them. Of they have companies that produce goods, increase the demand for those goods, make sure that those goods are more expendable. What's the term for it when
planned obsolescence?
Planned obsolescence. You make these things, they're going to deteriorate in 5-6 years, and it's 100% in your best interest to make sure that they do, because who the fuck's going to buy? If I had an iPhone that lasted and was at this level and lasted 5 to 10 years guaranteed, sure. But then it's also the actual structure of the technology that it's built into as well. Of you have these things, you become dependent on them, and even if they do still work, they're not as good as other people's things, and then it becomes a status game. So it's like,
what happens?
Wired AirPods, sorry,
headphones?
Like whatever the wired headphones. It's like you had the Zoomers on TikTok calling them broke pods, and it became a whole social thing of like, oh, he's got the broke pods, and you're like, fuck.
Well,
they're doing it organically. Apple's doing it by just being like, these exist. The wired ones, ugh. Yeah.
Well, see that, and that is why I like to look at things holistically, and that's why I bring up the Fiat example, because I think with technology, you have a perfect feedback loop. And you just kind of illustrated it. So first, if we touch on the example with like CEOs and executives and board members disproportionately out earning their employees, that is because, again, we've come to the consumption model, right? And what allows more consumption? Growth in the economy. Growth in the economy and a consumption model is what drives all. So they are closer to the money printer in that example. They are closer to the Cantillon Effect, right? They are individuals that are driving that consumption, that are driving that growth in the market. Therefore, they're going to disproportionately get a larger portion of that market, that share, right? Now, the reason why I say technology creates a perfect feedback loop, because technology, as it grows, even with planned obsolescence, if you spend more money on an iPhone, let's not say you're a weirdo like me that loves gadgets and buys a new one every year, right? Let's
Same
say you
boat,
even
man. I'm hopeless for it. I'm sitting here talking
yeah.
about planned obsolescence, and I'm like, ooh, new thing.
Well,
It's bad.
exactly. But if you take the example of someone that's doing it every 3 years, let's say, right?
Pretty
Let's say
standard, yeah.
you're buying a new computer. Or rather, here's a concrete example. A lot of my work I do is as a developer. I also work in AI, right? And I do a lot of work with AI. The computer that I used just 3 years ago cannot handle the language models that exist today. However, by me exerting the capital, by me spending the money, and under my desk here, I have several machines that are linked together for VRAM. I'm not going to get into what all that means, but let's just say that linking them together allows me to run language models that are very, very large, with very, very large parameter models, right? That $15,000 to $20,000 expense has quadrupled my income, right? Now, and when I say quadrupled, what I mean is from 3 years ago to now, because of all the things I'm able to do, I've 3x to 4x my income doing that, right? That is how the consumption model, and that is how this model is very, very beneficial. So that is one way it's extraordinarily beneficial. Let's give the flip side to that. If you are an individual that is working at a company, you're an analyst, you're a mid-tier manager, whatever. This model is not advantageous to you because you cannot stay ahead of inflation. You cannot stay ahead of Cantillon Effect. You are at its mercy. Even if you get raises, unless you are able to, in this system, advantageously leverage technology like I am, advantageously leverage investments like we are, right? We're in Bitcoin, we're in crypto, we could be in strategy, we can be in whatever. We are closer to the money printer. We are more likely to benefit from the Cantillon effect than 95% of the working force. And the technology creates the perfect storm in that it is advantageous to keep the consumption model going because as technology scales, you can consume more. As you consume more, there's impetus for technology to scale, and it just feeds itself, and it keeps going and going and going. Now, where things are going to get interesting is we're going to hit a point where the amount of consumption that we can do cannot outpace the technology. When that happens, I think is when the major schism in society is going to take place. Because if you have a reality where you buy a computer in 2020, you have to do upgrades to be able to run language models in 2024. You buy a computer in 2030 or 2035 that has a language model on it that used to take a $15,000, $20,000 setup to run, that can then be upgraded because the language models have become so condensed that you can get a newer and newer and newer language model that wouldn't necessarily need more GPU power or processing power to run on the same machine. The consumption model starts to crack. And then things become so cheap to produce because you have the ability to have a 3D printed aluminum frame if you're Apple You don't need a team of developers to do it. 3D printing has scaled to such a level that you now need two people working with a team, one manager that's working with one creative director. The information flow becomes so streamlined that then you are now putting the schematic into your computer in the US that is then going to a 3D printer in Bangladesh or Vietnam or Tokyo or wherever, being printed for a fraction of the cost that it is printed today, and that is taken to market within 6 months. And then 3 months later, you have a whole new thing again.
Yep.
And the cost of production just keeps coming lower and lower and lower. And then the consumption model starts to crack a little bit. In that consumption model cracking, this is where Bitcoin, I think, finds its footing. This is where I think gold, silver, also will find their footing. This is where I think the companies that are going to be benefiting from it, the Nvidias, the Teslas of the world, Apples, Microsofts, they will find the outsized returns that people are looking for over time.
Yep.
So we're seeing an S-curve adoption of everything is what I think. And when the model starts to crack, that is where I think these equities and where I think Bitcoin and where I think individuals are going to start looking for that new thing that they're going to need in mass. And I think that's where the S-curve for mass adoption starts to take off.
Yeah. Have you ever, and this is a wild one, have you ever read Dark Enlightenment by Nick Land?
I've heard of it, haven't read it.
It's pretty fucking, I would suggest checking it out. It's like, he's kind of like the grandfather of like accelerationism. And his entire shtick is this idea that, we are now entering a technocracy, and rather than, it's a very interesting philosophical take, because rather than kind of bemoaning the lack of egalitarianism in technological advancement, he kind of just goes, well, it's a beast that we've let loose. There's no putting the toothpaste back in the tube. Now we're just looking
out of the bottle. Yeah,
and this is the issue. He follows it to its logical end without bringing in any kind of disparagement around it. And if anything, offers this idea of like, well, the new technocracy and like technological elites are going to rule the world. And rather than being upset about it, you should just figure out how to adapt to it. It's a very kind of bleak. People often criticize him for being like, neo-fascistic, all sorts of neo stick-in isms at the end of it. But it's very, I think it can be a little bit uncomfortable to read, I think, the Nick Land Dark Enlightenment. But I think that it is concerning if you are like a democratic communitarian impulse kind of person. I think if you sit on the center left, you'd find it very disconcerting to read. But I think that it's very, it's interesting, and it does lend itself well to the kind of stuff that we're talking about here in terms of, I don't think that you can really put this stuff back. You're not going to say, oh, well, people stop using technology. Yeah. Governments aren't going to be able to come in. Governments can't keep up. They don't even know what to do with fucking social media, and it's been 10 years. Like, they can't even effectively legislate on, hey, this is having a terrible impact on people. We, even as a society, can't agree on the net negative impacts of social media. People still say, oh, but iPhones are good. That's fine. Like, I'm sure everyone kind of knows it's bad, but it's like, well, and I'd say that the majority of people are addicted to their phones, myself included. So, yeah.
Well, the joke I make when people worry about a future where technology rules everything and we're peons or whatever, and they try to create a distinction in terms of your worldview or your ethics or whatnot and how you would view this outcome. I say in Terminator, I'm pretty sure the Terminators were killing Democrats and Republicans the same. Right? So with that said, and this is why I say that, with every evolution, there's been disruption. It is not something that should be praised, but it's also not something that should be feared. It is not something that should be looked forward to, but it's also not something that should be lamented. And what I mean by all of that is this. When the Industrial Revolution kicked off, you had the Luddites, right? And the Luddites were the individuals that were very, very anti-technology, very, very anti-progressive, progress.
I'm still a Luddite in many respects. I'm like, no.
Well, and there's validity in the view, right? But here's the thing: being a Luddite didn't stop the fact that the world went from a place where we can only feed 100 million to where we can feed 3.5 billion. Right? The disruption it created was far outstripped by the creation and by the net good it brought to the world. In this example, where we have a future that's run by AI and whatnot, I think there's a disproportionate leaning on both sides. It's either people are, oh, it's all going to be great and it's a utopia, or it's going to be a Skynet and a Terminator is going to crush my skull, right? Or they're going to be reading your brain. They're going to be downloading your life. They're going to be controlling every aspect of your life. Or it's going to be perfect. Everything's going to be abundant. We're all going to be in flying cars. It's going to be fantastic. We're going to work 2-hour days, right? There's no real. Yeah. Well, I mean, there's no real
It's
nuance that it takes.
It's just, oh, it's
Because
wonderful.
I think to your point about social media, we have social media-fied everything. Everything is a catchphrase now, right? Nuance gets drowned out. The most sensational ideas get pushed forward. So, in all likelihood, and this is just my opinion, the world is going to advance, but it's not going to change. And the reason why I say that is because we had the Industrial Revolution. We are in the information age. We're in the internet age. We're also now entering in the AI age and the robotics age. I think the AI and robotics age are the last age before the transhuman age. But we're not going to get into that for the purposes of this call. We're going to see a
Another
world
time.
Yes. We're going to see a world where people are working alongside these tools. They're not being wholesale replaced by these tools. And the fact of the matter is, and this is where the harsh part comes in, personal responsibility does play a factor. It is your responsibility to be in tune with the world in which you live. And if you are blindsided by world developments, and when I say world developments, I'm not talking about where AI is right now. I'm talking about the fact that when AI is scaling and is woven into everything. If a person tells me, I didn't see this coming, I'm going to look at them like, you kind of had warning.
Yeah, time. Yeah.
Right? It is not as if we went from ChatGPT to Skynet in 6 months. If that were to happen, we all would be cannon fodder for whatever the hell happens, and we can't predict it, right? But this is why I like having conversations like this. It is because it allows you to test your own theses, to get information about other things, and also keep yourself abreast of the world that you live in. I think that the impetus is, like, you're using your headphones right now to talk to me, but the impetus is that people put in their headphones and they shut out the world.
Yep.
And if the headphones aren't playing something or representing something they want to hear, they turn it off. That is not the way to survive. That is not the way to thrive. I would have never learned about Bitcoin, Nvidia, any of these other investment opportunities. I would not have been able to grow my career. I would not have been able to do anything if I had my ears closed and my eyes closed, right? You have to keep your ears and eyes open and your mouth shut for long enough so that when you speak, what you speak carries weight. And that's what I try to do. So I don't think it's all doom and gloom, but
Yeah. Well, I really like this idea of what you just brought up there with this idea of personal responsibility. Now, this could piss a lot of people off, but I think it's very important to remember that, I do think that modernity has made a lot of people very, very placid. I sound like I'm being a fucking fascist here, but it's like I do think that I've got the slick back hair too, so we're going. I do think
you do have the look. Right now, you do have the look, and I have the military look. Right, I got the shaved head. I got the buzz. Like, we both can be Gestapo like
we're
motherfuckers right
putting
now.
we're putting a bad spin on it, but I do think that modernity has made a lot of not just modernity, but this idea of material wealth accruing at a base layer has made people almost expectant that exactly that can continue over time. And it's this idea of like, oh, well, I'm entitled to these material conditions continuing in perpetuity without any major social change. And move back 100 years and things were extremely different for most people, of like, you know, material wealth and the expectation that that would be fine. Like, you know, and this is something that's come of the capitalist experiment, which I think is very, very good, which is the idea that food, security, safety, and shelter have all just naturally arisen, and most people in Western democratic societies live safe, healthy lives for the most part. And yes, there's increasing disparity, but again, the material conditions afforded to the base layer of society have gone up so massively that even
Standard
the
of
poorest
living,
people,
technology, all of it, yeah.
that standard of living increase of even the poorest people in, again, most modern countries makes, you know, the even aristocrat 400 or 500 years ago kind of look shitty. That's a contentious thing of saying, because there were so many other added benefits and power that those people had that I think that that's not fair. But just in terms of, you got a fridge, you got a microwave, you got a car,
Indoor
you can
plumbing.
do indoor plumbing, clean water that comes to your house, you can shower every day. Like, it's those basic things that, to be fair,
No dysentery, no dentition, no horrible diseases that can kill you if you just walk outside and get scratched. I mean, there's all kinds of benefits that outweigh everything. But yes, continue. Yeah, you're absolutely right.
But that kind of stuff, I think, has made people very, very expectant that those things can just continue on into the future. And it's like, no, things are going to change rapidly. And unless you are actually looking and watching out for the shit as it crops up, these new developments, these new things, it's like, it's not a guarantee that you go to university, you get a degree, you get a good job, and that's just going to be the template. It's like, that's clearly already not the template today. And I think that that's something that a lot of people still get tricked into believing.
Yeah.
Like, oh, but I just need to do these things, and then everything will be fine for me. And it's like, maybe in the 80s, maybe in the 70s, that would have been okay. But things have already
even the
changed.
90s, even the 90s in some ways.
Yeah. If you were my
But
age in the 90s, who cares? But it's like, these things are changing. You need to do different things. A 9 to 5 may not cut it. And I know that Gary Stevenson has built a very, very big platform on like, and that's a fine thing for him to argue in like, I completely respect it. This idea of like, hey, governments should be representing the people's interest to do that. And I think that that's a reasonable push to have. I'm not entirely opposed to it. I do think that that's a fair claim to make of, hey, we did this 50, 60 years ago, but I don't know how well it lines up with reality. Because if you look at automation, it's like, well, where are people going to work? Are we going to have fake jobs? I remember when I lived in China, I went to this city, and the government in the 80s they ran out of shit to do with people, and they needed jobs, and they needed to make it look like they were still doing stuff. So they built fuckloads of public toilets in this city so that someone would build the public toilets and someone would be cleaning the public toilets. Bam, jobs. So the city we walked through had a public toilet maybe every 100 meters as its own little block. And it was just really comical, but it was like, what happens? That's kind of like the almost like comedic level to which it can be taken of governments creating a job for someone and being like, well, public toilets. But I do think that it's like, well, it's going to butt heads with reality, because if you look at the Industrial Revolution, people could upskill reasonably. You know, you'd come off the farms and you go into the factories. And then from the factories, you could be retrained to do management, paper stuff,
still can,
numbers. We still can. But then now we look at AI and technology. Do you really think that a fucking truck driver from Milwaukee is going to be retrained to code? And I think that was something that came to the fore with learn to code. It's like, are we...
Well, so that's
and how
the
many
thing.
coding jobs will there be if we can get AI to do it well as well? How many humans are we going to need to be doing this? That's my very uninformed take on this.
No, it's not. It's not uninformed. It's actually rather informed, because you talked about a lot of dynamics there. So here's
It's a mush, but we're getting there.
here's how. No, honestly, you did have a lot of the dynamics at play there. But here's the thing with it. In a future where you have AI tools that can do all human cognitive work, It is on the humans to determine or to redefine what cognitive work is and what work is. If we take the current model, to your point, if Elon Musk and Figure AI and all these other robotics companies, and then NVIDIA, and then OpenAI, and so on and so forth, and all these AI companies, if things go the way they think that they're going to go, and the way I think they're going to go, you will have grocery stores with robots that can assist you with anything. You'll have warehouses that can ship things 24/7 with workers that don't need sleep. You will have trucks that are driving not internationally, sorry. You have planes flying internationally without the need for pilots. You'll have trucks driving nationally without the need for drivers. You will have the ability for someone, if they have $5,000, to have a robotic assistant that can vacuum the house for them, that can wash their dishes, that can do all that stuff for them. However, all of that will create new industries. The real risk is that when we have physical robotics power and networked AI power that can exist autonomously. A lot of the autonomous things that we're talking about right now, if you take a look at like Waymo, where I live, there's a lot of Waymos. There's a lot of cars driving by themselves autonomously, right? But they still have human oversight. The real worry for a lot of people is what happens when they scale to a point where they don't need human oversight, and what are they going to do, right? That's a valid question. I think it's overstated because, and this is where I'm going to get really philosophical and really technical, true intelligence would require not the ability to think, but the ability to think, to be aware that you're thinking, to be understanding why you're thinking, and having an impetus to think. It is multi-layered. It is not just a matter of processing power. It is not just a matter of networked power. And why am I bringing all of this up? Human ingenuity, in my mind, will always have an edge because we are mortal, we are finite, we are limited creatures, and the only thing that pushes us to do more, whether you take a consumption model and a capitalistic model, whether you take an altruistic model of what pushes us to live in peace with one another and what will push us to make sure that everyone's provided for and protected and so on and so forth, is that vulnerability. A system, a robot, an AI, an intelligence without vulnerability lacks the impetus to grow. It will only scale as it needs to scale. Need will push it to scale if it needs. Survival will not. Survival is more than a need. Survival is something that has very, very deep philosophical, psychological, emotional, and physical underpinnings. Something that doesn't need to eat, sleep, something that doesn't have desire, something that doesn't have a further innate drive will always be limited. And that is where I think humans will always have a place next to all of these grandiose changes that we're seeing. Even if we manage to network all these AIs into organic brains and whatnot, it's not the same thing. The evolutionary process has brought us here, and the evolutionary process will guarantee our survival unless we all nuke each other to dust, which, people like to bring that up, but I don't think that's a likelihood, but that's an outlier.
Yep. No, this is something that I come back to, and it's something that shits me with the AGI arguments of like, oh, we've got I studied philosophy at university, so this is my kind of field where I get fucking annoying to people, but particularly with like the tech bros that are like, oh no, AGI, like we've achieved it internally. I'm just like, fuck off, no you haven't. That's why I'm so like, I am concerned about AI, but I'm less worried about it than others because I think that it is quite advanced, and I think it's further along in some respects than people consider, and I think it's much, much further behind on another scale. I think in terms of automating a shitload of processes over the next 5 to 10 years, we're going to see a lot of shit replaced with AI. There are so many things that get done at like middle level management jobs that you just think, A
Yeah.
computer could
But
replace this in a fucking heartbeat.
but see, here's the thing. That's not the fault of AI. That's the fault of our own consumption model that we have useless jobs.
Okay, and I agree. And then
Right?
from
So
the
that can be
what
so easily supplanted.
exactly. So I think that there's so many areas in which, yeah, replacement is just going to be a natural byproduct. And if you're going to be like, oh, my useless job got replaced by a computer, it's like, sorry, but
But
then
people were saying that when computers were coming out as well, though, right? That was going to replace everything. But instead, what happened? It didn't replace people. It just created more jobs for people that are using computers.
yep. Email.
So
It's
the
like,
more
oh, that'll
the
solve
most
so much stuff. And now it's like, no, now
yeah.
people literally just have email jobs. It's a meme. Yeah. But then what
Now
you
the
said,
most likely outcome is that it's going to be humans using AI. It's not going to fully supplant us all. Just like with computers, we had to learn how to use computers in our day-to-day job. Now, I mean, think there are very, very few jobs that exist right now that don't use a computer day to day, right?
mhm,
So, um, I mean, there are entire sectors that do, but even still, even if you are a factory worker, even if you are a janitor, even if you are a sanitation worker, think of whatever job that's more hands-on, right? That's more using your hands and physical labor. At the end of the day, you're still doing doot, 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 into some kind of an automated machine, entering your time. You're still sending an email at some point. You're still receiving money electronically. Computers are woven into your life whether you want them to be or not.
yep.
And I think that is going to be the likely model that we
Mm.
follow with AI. We are going to work alongside the AI. We're not going to be having AI overlords telling us everything to do and controlling our lives, right? I just don't see that as a tenable model, really.
I think we're going to have people that are in a sort of more of a technocracy that will do
And
that.
but how is that
Proxy
different from
through.
today?
Exactly. But I just think that the actual dynamics of how that interfaces with democracy and government will change pretty drastically in the next 10 to 20 years. But back to what you were saying about essentially the intelligence, or this idea of a conscious entity. And this is something that I really like the fact that you brought up, was the evolutionary side of it. And it's like, well, if a machine doesn't necessarily, it's the Rick and Morty thing of like, what is my purpose? You pass butter. It's like, it's still being given commands. It's still contained within parameters that have been set by humans. And I think one of the biggest things for me is that it's not embodied. It doesn't have a biological body that organically responds and perceives inputs
The
and
environment.
outputs, and then has randomness built into it, because you're constantly randomly recreating genetic material over time, and then that creates new sets of random perception. It's why we have artists, it's why we have creatives, it's why we have engineers. It's like you have this massive varied set of interoperable kind of self-regenerating things that show up in generations. And I just don't think that, and this is where I think you would have like a Thomas Kuhn kind of shift, where it's like maybe there's a new paradigm that comes into play, and the entire mental model of how cognizant functioning is imagined changes. But up until that point, I don't think we're going to bypass evolutionary standards, because I think that's kind of the base layer of reality. And I don't think that you get an AGI that's going to be able to consider itself conscious in a way that would threaten human agency in the world just yet, or
Well,
anytime soon, to be honest. So, yeah.
I'll end with these two quick points. Point number one, to your point, our creative process is more than just cognition. Our creative process, our experiences in the environment have had influences on our cognition, and it does have influences on our intelligence. It does have influences on our creative process. The net result of what we do has been built up by our interactions with others and with the environment. Even if an AI gets that, in the sense of that it's able to network with everything, get the cumulative breakdown of all knowledge, it is still the net result of human ingenuity.
Yep.
And it will only go as far as human ingenuity will scale. Because it's not, because I keep trying to explain to people, just like you touched on as well, it's not just about processing power. There's far more to intelligence, consciousness, cognition than just processing power, having the right connectors and whatnot, right? final point is where I think things are going is it's going to be humans merging with AI. I think that is the natural progression of things. And that may freak people out, and it may say, well, you cease to be human, to which I disagree. All it does is it gives human beings super cognition, super intelligence, super awareness, supreme knowledge with the human experience at the same time. And I think then the human race collectively makes this next evolutionary leap. That will be an epoch event where we truly see the day we knew yesterday and the day we know tomorrow fundamentally different once that moment actually happens. Because it's kind of like inventing the wheel or inventing fire. That shit only needs to happen once.
Yeah. Yeah.
And
it's
once
a threshold
it does,
event. Look, once you pass through it.
It's a threshold event.
Yeah,
like, just imagine if you woke up tomorrow and all of a sudden you knew everything from how to make a turkey sandwich to the most complex quantum theory known to exist. You know how to put together Lego. You know how to build a rocket ship from scratch. The entire spectrum of knowledge is exposed to you on everything, all at once. With regards to the human experience, we weave that into it, right? Think of the creative explosion that happens then. That's where I think things are going.
Yeah, it'll be, and that's the kind of thing where I don't, once you push through that threshold, I don't think that anyone can have any good predictions about what happens after that. I think it falls into the bucket of entirely unpredictable, and like once you get there, that's a bridge that you cross when you come to it. It's like, okay, we'll see what happens. I think any preparation for that, I mean, I'm speaking about it like legislative preparation for those kind of things. It's like we can't even, again, we don't know how to deal with tech as it exists today.
Well, that's what Ray Kurzweil calls the singularity. It's a singularity event. It's a threshold event, whichever phrase you want to use. It is an event that, I call it a oh shit moment, where you really look back and you're like, oh shit. Because once it happens, it's there. And there's no undoing it. So, I mean, I think we'll be fine. But then again, I could be wrong, and you and I will end up having a stream like this where the sun is coming into the earth, and we're just like, well, we were wrong.
I want to be optimistic, but I do lean more towards there's probably more downside to it than people think. Anyway, we have veered very well off course with this. I like it.
You can make it 2 separate streams.
Oh, true.
If you wanted.
The AI, fuck it. That's fun. I like it.
Yeah.
It's good. I don't know. We'll try and bring it back to some stuff around tokens and Bitcoin. You work in AI as well. So talked about how you're doing like a lot of development work there. One of the bull cases that people throw around for crypto and digital assets, inclusive of Bitcoin, but also including a lot of the other, altcoins as well, and just the general blockchain tech, it being internet money, is that it fits in very, very well with the kind of new age of AI. How do you see that panning out? Of if we have a network of semi-intelligent things all networking with each other, processing payments, do you think it's crypto that comes into that, or do you think it's something else?
Well, I'm actually one of the people that thinks that'll be very unwise. If you think of the current capital model that we have, do we really want autonomous AIs making trades and exchanging? No. So there's that. But then let's take a look at it in the sense of commerce and commodity exchange, right? Is it possible that we could have a world where you have AI agents that are exchanging information, exchanging knowledge, exchanging what have you, right? Let's say you have your own autonomous agent that you want to go do all your shopping for you, right? And it knows your habits. It knows what you typically buy. It knows that, hey, it's a Tuesday, you're probably going on a bologna sandwich. It goes on, orders that for you, right? And then you have another agent on the Amazon side that's issuing the sale. Do I think it's possible that crypto plays a part in that? Yes. Do I think we need millions of cryptos to do that? No. I think that, again, in that environment, my view is that the best case is that Bitcoin is as a base layer for the money, for the network, for the financial system, and you have other layer 2s, layer 3s that are existing, whether it be through something like a Lightning or a Liquid, or whether it be through stable coins and whatnot, existing and interacting and doing the commerce side of the equation there. I don't think that, this is not me dunking on anyone's coin, I don't think that, people that talk about the Solana ecosystem scaling up to some AI behemoth, I think they need to think it through. We don't need tens of thousands of coins for that. We need one.
Yeah.
Right? We don't need 15 Bitcoin. We need 15 different versions of Bitcoin. We need one. We don't need 100 different versions of XRP. I think XRP is a shit coin. Fine, I'm saying it that way, but
It's a safe space, man.
One.
You're allowed. Yeah.
Yeah. we don't need thousands and thousands of cryptos. So I think that people have the technology side of it, right? But the crypto side of it is where things kind of go off the rails for me. Things always trend towards one. And coming back to the example I just made earlier, you only need to invent fire once. You only need to invent the wheel once, right? We've done pretty good with those. We only need to discover gold and precious metals once. We didn't need to rediscover them once they were found. They were found and they had utility. Much like Bitcoin, we don't need to reinvent the wheel. I think we have the ideal state, and now it's just a matter of building on top of and around it. And we will find other use cases for other protocols, I believe, but not in the way that people are thinking, is what my long-winded answer would be.
Okay. No, man. Mate, I think that's a good place to wrap things up. No, we got across it. Thank you very much for the expansive and kind of like pleasantly wandering discussion. That was good.
Well, thank you for having me on. And this is why I like coming on with you, because we tend to go off on these tangents that just take us wherever the hell we're going to go. And I think it's great for conversations.
Dude, it's always a pleasure having you on. We'll have to run it back again, soon. Try and get the 4th episode out at some point.
I'm all for it. I'll be happy to.
Hell yeah, man. All right. Adrian, dude, thanks again. You have a good one.
All right. Thank you. Peace.